What's going on, everyone? Welcome back to my YouTube channel. Today we're going to discuss trade psychology and the different realities a forex trader can be faced with. As a forex trader, we see a lot of things happening in the market every day. On my chart currently we have Euro USD, so I'm going to zoom out and show you. So here we have 1, 2, 3, 4 trades here on this chart, and as you can see, these 4 trades have different outcomes, and that is what we're going to discuss today: the psychology as a forex trader. So technically, as a forex trader, when you come on the charts, the first you always want to do, conduct your analysis, and most of the times we see something like this. So we can take this, we have a break of structure here. So this will be our boss, indicating that this market is bullish. We have our demand here, check. We have another break of structure here. All of this indicating a bullish sentiment. And price comes back to this demand, check. So on the 1 minute time frame, we would be able to get a 1 minute entry to give us 8-hour trade here to the supply. Now, first of all, we don't want to target these highs because this is the first time price is coming to this demand, so we still need a couple of an order flow before price could go higher. Okay, so this is what we're going to have on the chart as forex traders, correct? And when we come this on the 1 minute time frame, we'll get entries around this corner here, around this point, and we can get about 8 hours from this trade until we see price fail to break this supply here and still came back to this demand. Now we have price come back to this demand, and as a forex trader, we have a break of structure here, we have a break structure here, we have demand 1, demand 2, and price has come back. We also have this demand right here, and now you can see this demand right here. Price went to the supply range, came back to this demand. Now I didn't buy here. You can see I waited for a structural shift which we had here, and price came back to the demand that caused all of this shift, which I took this entry from the 5 minute time frame, right? Now let's see what happens. So technically, and because of all of this that have happened here, first this one that happened here from this demand, and price coming back to this demand and giving us this shift here and giving us this our entry here, this demand, validating it, and also giving us a new break of structure right here. You understand? So we would be inclined to take this price higher. We have everything here saying that we should go higher, correct? We have all this, and we have this demand holding, breaking structure. So technically, as a forex trader, we would want to hold this trade, like you can see what I did here, and go for a 10-hour. As a matter of fact, take out this liquidity, or go for a simple 10-hour. But now look at what happened here. Now price only succeeded giving me 6-hour at a 6-hour here, and after taking some profit, price came back to break even. So the remaining trades we had going on here, price came back to break even, and now price failed to go to give me a 10-hour and also failed to take out this liquidity. So if you're trading forex and perhaps you are a type of trader that doesn't want to take some partials, depending on your risk management, and you decide to want to hold this trade all the way from here to this point. Now when you get to 5 hours, when you go to this point, technically you'll be at break even. So it means this trade will end up a break even trade. There is no win, there is no loss. Now here you get 8-hour, and following my plan, I'll get an 8-hour here I get break even if I was to hold this without taking partials. But if I was to take partials, take some profit will be closed here, and the rest will be break even. Okay, now so right here price failed to go to this point. We failed to go higher. Now these are what indications of what bearish sentiment. And now guys, see this, we right here, we didn't have a break to the downside. This demand got broken with this momentum. You can see this momentum to the downside, price broke it, and all I did here was to map out this supply, and price came to the supply. Of course, you don't want to be hasty, you want to be patient, and when price comes here, price give us a little reaction, comes back, takes out this liquidity here, as you can see, came back to this demand. Now, since we're coming from a supply, I mean, we are meant to be seeing breaks. I mean, the plan was this: we had this here, we had price take liquidity. I was meant to see break out. I needed here to be broken, and for price to come to a supply that caused the break, perhaps go on the 1 minute time frame or 3 minutes time frame and wait for a new order flow so I can sell to the downside. This was the plan. So I was waiting. I kept waiting, and I sell price kept respecting this demand. Price came here and pushed higher, came back to this point. I was like, nope, no problem, let's keep waiting. And I kept on waiting, and you can see, guys, we have a bullish order flow. Now, if you look at all of this information, we have a break of structure here, this break here to the downside with this massive momentum. We have price pull back to the supply here and takes out liquidity inside the supply. However, we have a demand here which is meant to for us to go lower. I mean, with all of this information right here telling us to sell, I still need this piece of puzzle here to get broken. But we failed to break it, and the price pulled back to the supply. Fine, we still have to wait for all this to occur. And while waiting, you can see simply that the order flow maintained bullish. As a matter of fact, price only just came down to take out what this trend line liquidity here with this move and break to the upside. And now, guys, I posted this on my free Telegram channel. If you're following my channel, you see I posted this and I said I was waiting. I had my eyes on Euro USD. I was waiting on this pair. And guys, guess what? The outcome of this trade is what you and we do not have the control of the outcome. That is trade psychology. Now, having done all of this work, waited and waited, saw all of this happening, avoided so many losses, because if you base on the 5 minutes time frame, if you're a person who trades 5 minutes time frame, lower time frame, there's a high chance you get caught up in so many losses around this corner here, around this area, because there was so many manipulation happening here. Price broke down, broke up, went down. There was so many breaks happening right on this point on the 5 minutes time frame. So there's a high chance of getting caught up in the wrong direction. But now, after waiting and avoiding all of these manipulations and liquidations happening, guess what happened? Price eventually broke to the upside. So now this demand right here got broken. You can see here we broke this demand here, and price did all of this. Now I had a new plan, and the new plan was this: I had this demand here, price was to come to this demand, and I was to look for some buys here. Now, I never had plan of putting a buy limit here. I wanted an order flow to be built before I buy. That was the plan. And price just came here and took out the demand liquidity, which is still part of my edge. Now, after giving me this liquidation, gave me a new entry point. So guys, here is where I was meant to enter from. Now, the plan is this. It's very simple. The plan is this. This pullback here, when price broke the entire structure of this whole thing here, this whole region here, good. So mark this price, the market was meant to come back. This pullback was meant to do this way, pick us up and just go to TP. But guess what? It never did. You see, price did not come back, and price just went straight up to TP. Now these a lot of times happens, and when this happens, guys, this doesn't mean you're a bad trader. It's just one of those days when we have high volumes in the market. It doesn't come back to pick you in, and all you have to do is just cancel your orders. Do not leave that order, that buy limit here. Do not don't hold tight to this idea anymore. You have to be flexible. I mean, the plan was to buy from this point and this for price to make this measurement from here to here. This was the plan, right? And price has made this whole movement. However, made this movement without picking you in first. So you have to adjust and cancel your buy limits. Don't hold on to that trade anymore and shift. So right here, after all of this waiting, we've missed this trade. That's fine. We move on to the next, right? So what I did next was come here. And now you can see I kept following the order flow. It's as simple as that. I just kept following the order flow. Right here, we have a break of structure. We are still bullish. We have a swing low. And we have this demand here. We have another break of structure on this point here. You can see this was the last break of structure we had here. This here was the last break of structure, and this here is our swing high. This here is our swing high. Okay, so now we have this drop here. We have a little bit of ranging movement. Price took out this low here, and now I was faced with there are two things involved here when you see something like this. Okay, now we are bullish. Overall, we are bullish on this market. So this is not enough reason for us to sell. And we also have this, a lot of times we can take this to be liquidation. I should say price, this could be liquidation of this level, and we start looking for buying opportunities. However, if we must take this as liquidation, then we need something to occur. That is, we need the price to shift here, which it did. Yeah, we need to see if this is liquidation, okay, a sweep, and market just came to this sweep to this point. We need a momentum, like we need impulse, an impulsive break. Now we failed to break this structure impulsively. As a matter of fact, we had Asian session, and price only went to take out this Asian session, as you can see here. And let's go on the 5 minutes time frame. So on the 5 minutes time frame, you can see what we have here. We have this Asian session, and while I came here, I began to study order flow. See, we have the break of structure. I mean, guys, I know it's not easy, but you just have to put in the work so you can get the best result. And price came here, took out these Asian sessions. As you can see now, this is the key point. This right here is the most important information for me. This was what determined the sell I took here. This sell you see here. This information here is the most important. I want to see how price is breaking. Now, since we are bullish overall, I want to see how price is breaking. Now, this is deficiency. This is weakness. These are all liquidation, not impulsive break. These are not break of structures. These are what liquidations. And when I saw all of these liquidations happening, and these were enough reasons for me to look for sell. However, before you can look for sell, we need to see what break of structure to the downside. And simply put, we have a demand here. We had a failed demand here, and price, as soon as we failed this demand, that was when I knew I was meant to sell from this supply. So you can see my sell here and stop loss above the structure, and went for our target. Now my target was here, was this demand here. However, there was a news, and the news just gave us extra. You understand? Now guys, the psychology of trade, you can see what we've done here. If we go back on the 1 hour time frame, let me zoom out. I want you to see. Now you can see the outcome already. I still have a plan. Okay, last week I had a plan on this. I was waiting for price to come to this. Is a breaker block. Now price could still come back here. It's a possibility, but as of last week, price never did. So let's add this again to this. Now you can see 1 2 3 4 5 trades, and you can see the outcomes. Now guys, you and I, we cannot control the outcome of one trade. That is to say, if we take one trade, we cannot control if it's going to be a win or a loss. So we got it. So whatever happens after that trade, if it's a win or a loss, we cannot control that outcome. What we can control is series of trades, not just one. I'm talking about 100 trades, 50 trades, meaning we can take one trade and lose it, or win it, or miss it out, just like this. Now, however, when you take 50 trades or 100 trades, now, does your edge always, if you have a good edge, chances is that you might miss your first 5 trades, you might take 5 losses from your first 5 trades. However, if you have an edge of, let's say, 50% win rate, if you have that, and you were to take 100 trade, means you lose 50, right, and win 50, then your risk to reward pushes you forward. All right. And if you have a win rate of 70-30, chances are you will lose 30 trades and win 70 trades. That is for 100 trades. Now, most of us, we focus on those losses, the 3 losses, or the 30 losses. If you have a 70-30, now we focus on the 30 losses and forget about the 70. Now, these 30 losses or the 30 missed trade could come first while trading in a month, why the winners come later. This is how it works. Now, when you let these losers, the ones you lose or the ones you miss, when you let the psychology behind this to mess you up, now guess what happens? Because you miss this trade here, you feel something is wrong with your strategy, you begin to change it, and that's not the way forward. You don't change it. I don't change it. All I do is to repeat. I keep repeating, be it a win, a loss, or I miss it like this. I just keep repeating, because I look at trading on the long term. So we want to look at trading in hundreds. As a matter of fact, that is the best way to look at in hundreds. Don't focus on one trade. Don't focus on the win you had today, or the loss you had today, or the missed opportunity like this one, or this one that happened earlier week before price didn't come back here. No. As a matter of fact, your duty is to keep interpreting the chart. Keep understanding what's saying, what's going on. Now I was waiting for price to come to this breaker block, correct? It did not come back here. However, that didn't stop me from coming here and studying what was happening higher. And I worked with all of these informations. And as you can see, different outcomes all happening. This is the forex market for you. So guys, trading psychology is very important. When you take a win, it's very important. When you take a loss, it's very important. When you miss out a trade, it's very important you keep yourself in check in all of these possibilities. So as a forex trader, we are all going to be faced with things like this, these kind of realities. Keep yourself in check, all right? Study the price action. You see, if you're not getting a clear break, let it go. I mean, if it's not a clear break, if your strategy, and if you're following me, you should understand how I trade already. Order flow is very important. I mean, you need to interpret and understand what is happening. A little information, as something as little as this, can save you, give you a great win, or give you a loss. So just little information as this get decided told me what to do right here. Now, so guys, focus on price action. Watch yourself, watch your mind, your psychology is very important, and keep yourself in check at all times. Be it a winner, a losing trade, or a trade you missed out. All right. So thank you guys for watching. See you guys in my next video.